Most people making this mistake have no idea it is a mistake. They think they are being careful. They think they are being responsible. They think that breaking up their cash withdrawals into smaller amounts throughout the month is smart budgeting, the kind of disciplined financial management that anyone on a fixed income should be doing. And then the letter arrives. Not a phone call, not a warning. A letter from the IRS with a notice number at the top and a deadline at the bottom. And by the time that letter arrives, the investigation has already been running for weeks. Today, we are walking through the one bank mistake that triggers an IRS investigation in 2026, why it is catching ordinary seniors and retirees who have never done anything wrong, and the exact steps you take today to make sure this mistake never generates a letter with your name on it. Which city and state are you watching from right now? Drop it below immediately. Because this mistake is hitting seniors harder in certain states than others, and I want to know exactly how many people in this community are making it right now without knowing it. Here is the mistake, stated plainly, without exaggeration. Making multiple cash withdrawals in amounts that individually seem small, but together create a pattern that the IRS automated monitoring system identifies as structuring. Structuring is the federal crime of deliberately breaking up transactions to avoid the $10,000 cash reporting threshold. The IRS uses document matching systems and automated monitoring to identify patterns in bank account activity that are inconsistent with reported income. And here is the detail that catches innocent people completely off guard. The legal definition of structuring does not require that you knew about the threshold. It does not require that you intended to avoid anything. The automated system identifies the pattern. And the pattern alone is enough to generate a federal review. NerdWallet. Have you ever made 2 or 3 cash withdrawals in the same week from the same account? Yes or no? Drop it below right now along with your city and state. Because the number of seniors doing this as part of completely normal budgeting, who have no idea it can generate a federal flag, is one of the most important things this channel has ever looked at. Here is why this is hitting seniors harder than any other group in 2026. Seniors on fixed incomes are the most financially predictable account holders in the banking system. Your Social Security payment arrives on the same date every month. Your withdrawals happen in response to that deposit in a pattern that is consistent month after month. Similar amounts, regular timing. Predictable relationship between the incoming deposit and the outgoing cash. To you, that predictability is responsible management of a tight budget. To an IRS algorithm, these consistent patterns of regular transfers and withdrawals are one of the top audit triggers for 2026. Capital Skyline. And here is the second thing that is making this worse right now specifically. Seniors who receive regular support from a child or split monthly bills with a roommate through apps like Venmo or Zelle are generating additional flags. Regular transfers arriving on a consistent schedule look like recurring service payments or unreported income to an automated monitoring system, not a family member helping with rent. Capital Skyline. The most important rule for 2026 is to keep your financial streams separate. A simple memo on every digital transfer, rent split January 2026, or birthday gift, can be the difference between a dismissed flag and a 6-month investigation. Capital Skyline. Here is exactly what happens after the flag is generated. And this is the part most people have never had explained to them clearly. The IRS conducts audits based on noticeable issues or inconsistencies in returns and bank account patterns. Returns that have issues are flagged for review. That review begins with an automated notice. The notice arrives by mail. It has a specific notice number. It has a response deadline, and it requests documentation explaining the flagged transactions. Missing that deadline or responding without adequate documentation escalates the review from a correspondence audit into a full examination. NerdWallet. For seniors who have never kept written records of why their cash withdrawals occurred, who have never documented that the withdrawal on the 15th was for rent and the withdrawal on the 22nd was for prescriptions, the documentation request arrives and there is nothing to provide. Not because the transactions were illegitimate, because the legitimate explanation was never written down. Here is exactly what you do today to make sure this mistake never generates a notice with your name on it. Start keeping a simple written record of every significant cash withdrawal right now. A notes app, a small notebook, anything that documents the date, the amount, and the specific purpose. Groceries, rent, prescriptions, utilities. That record does not get filed anywhere. It sits with your financial documents and it becomes your immediate response if a review is ever initiated. Documentation prepared before a review starts resolves the situation dramatically faster than gathering records after a notice arrives. Capital Skyline. Add a memo to every digital transfer you send or receive. Venmo, Zelle, Cash App. Every transfer, every time. The memo creates a documented explanation that the IRS automated system can match against the transaction. A transfer with no memo is a data point with no context. A transfer with a clear memo is a documented transaction with an explanation attached. Ensure your bank profile matches your tax return exactly. If your deposit is rejected or your name does not match your return precisely, the IRS flags the discrepancy automatically. Log into your My Social Security account at ssa.gov and verify that your direct deposit information exactly matches your current active bank account. One transposed digit creates the exact condition that generates an automated flag. AIU Web. Consider consolidating your monthly cash needs into fewer, larger withdrawals rather than multiple smaller ones spread throughout the month. A single monthly withdrawal for your total anticipated cash expenses creates a simpler transaction pattern. Simpler patterns generate fewer automated flags. Fewer flags mean fewer monitoring windows. One final thing. Scammers are calling seniors right now claiming to be IRS investigators, warning them that their bank account has been flagged for the structuring pattern we just described, and they must pay a resolution fee immediately or provide account information to prevent seizure. That call is a scam, every single time. The real IRS does not call you to warn you about a bank flag. Every legitimate IRS communication arrives by mail with a specific notice number you can verify at irs.gov. If any call arrives claiming your account has been flagged and you must act immediately, hang up. Then call the IRS directly at 1-800-829-1040. Has your bank account ever been flagged or reviewed without a clear explanation? Drop your experience in the comments right now, along with your city and state. Like this video if it showed you something you did not know before today. Share it with everyone in your family who manages cash on a fixed income. And subscribe right now, because the next investigation covers exactly how to respond if an IRS notice has already arrived. The system has rules. You deserve to know what they are. Take care of yourself.